All right, what is up, everyone? Welcome to day 2 of the trading strategy. Today, we're going to be going over the second step of the strategy, which is going to be the point of interest, where we are going to be looking to take trades from. Once 10 a.m. opens, we're looking for 10 a.m. to manipulate into a certain PD array. This video is going to be a little bit longer just because this has a lot of information going over the second step. It's probably the most important step. I'd say it's equally as important as the entry function, which we'll end up going over either tomorrow or the following day. So, just to simplify this point of interest video, we'll start with a few examples, and then I'm just going to slowly dissect each example and why I look for us to tap into that zone, what each zone is. Typically, I'm looking for either a long or a short from a fair value gap or a change in the state and delivery. Or the third option would be an order block. Those are three ICT concepts that those are super beginner concepts. I don't end up teaching them on my channel here, but there's plenty of YouTube videos all across YouTube for you guys to figure out how those three concepts work. And obviously, I'm going to draw them out for you guys today, slowly going over them. So we'll just go back to a random point in time. We'll go back to this date right here, and then we will get into the 10 a.m. time. So from the video yesterday, we clearly see that we have a bearish bias. I'm not going to go over this again, but we'll just mark out the low. You could see that the 6 a.m. candle ends up closing below the 2 a.m. candle low. So going into 10 a.m., I want to see a open high, low close. Okay, so this is when I will drop to the 15-minute time frame. So once 10 a.m. opens here, you can see right here. Okay. Every morning I also mark out the 10 a.m. opening price, which is going to be right here. I can type this out for you guys. This is 10 a.m. opening price. When we have a bearish bias, we want to see 10 a.m. open high and then have a low close. So we want to see us manipulate into a point of interest. Oh, also this example right here is going to be based off of 15-minute rejection block. So there's actually 4 concepts. The first one's fair value gap. The second one is CISD. The third one is going to be an order block. And the fourth concept that we use is rejection blocks. Unfortunately, rejection blocks are more complicated to understand, whereas just a fair value gap, which is probably the easiest concept for you guys to use, right? I'm sure a lot of people already know about fair value gaps and what they are, how to draw them out. They're extremely simple. And typically the most A-plus trades, the highest probability trades that come from my model are always delivering from a fair value gap. But just because in this case it's delivering from a rejection block, this is still A+. All of the entry functions that I just described, all 4 of them, are equally as important, and I would say have typically the same probability going into every trade, as long as the entry function, which we'll cover tomorrow, is A+. So we see 10 a.m. open here, and we end up coming up into this rejection block. Okay, this is going to be a 15-minute rejection block right here. If you watched any of the backtesting videos, you guys know that every single trade that I'm taking is based off of internal structure to external. So rejection blocks are typically the last piece of internal structure before we end up taking out this high. And then external structure is always going to be either a swing low or a swing high. So the reason why this is a rejection block, I explained this. This was a trade that I ended up taking, I think, a little bit ago. We are delivering from this 30-minute fair value gap right here. Okay, we end up putting in a up close candle, then a bearish candle, and we end up creating a big wick right here. So that is considered our rejection block. Once we get into this area of interest, right, I'm scaling down to the 1 minute time frame. The 1 minute time frame is the only time frame that I'm executing on. So I'll scale down here. I know I have the box, the area that I'm looking to short from, marked out. And then clearly my entry function is the change in the state and delivery, which we end up getting right here. So here I ended up taking a short, and it plays out right there. Okay, only targeting a 1-to-1 risk reward every single time. Right there. That's just going a little bit into the entry function. I know this is just about the second step, which is the point of interest video. So this was the first type, which was is rejection block right here that we're delivering from. Internal structure. We end up respecting the consequent encroachment of the rejection block, which basically just means the 50% mark of this point of interest right here. So the next example that we'll go over, I believe we'll try to find a fair value gap really quick that we end up delivering from. Let's go to the next day here. Okay, right here, perfect example. Where we end up, let's see if we get down into there. Okay. All right, let's see what, first of all, we'll go see our bias. Okay, that's right. This day we had no bias because we ended up sweeping out both sides of the range. Of course, we have to start with our bias. First things first. Okay, this day we end up having a bearish bias. Why? Because we close inside the 2 a.m. candle high right here. There I drop down to the 15-minute time frame. Okay. This is going to be going over the change in the state and delivery, point of interest, the internal. This is also considered internal structure. Okay. So we have 10 a.m. open right here. I would want to see a open high, low close into this 15-minute CISD. So what does 10 a.m. do? 10 a.m. opens right here. You can mark this out right here. And we can see that we end up tapping into the 15-minute gap. But the reason why this is considered not a good trade, I still ended up taking this just because this is considered a high probability zone. But when we did come up into this 15-minute CISD, we never ended up creating a stop hunt. And then later you can see we created this stop hunt right here, taking out this swing high within this high probability zone. And we get our 1 minute bearish change in the state and delivery right here. Right here. Okay. So this would be considered the super A+ setup right here. We have a stop hunt within a zone that we're looking to short from. We have a bearish bias. And right here, we end up hitting TP literally by one tick. So that's how we use the CISD. In this case, this would be considered the external low right here. If I were on a live account, I typically would target the external low, but since I'm on a funded account, I'm only targeting a 1-to-1 risk reward just because it's a lot higher probability that hitting a 1-to-1 versus holding to a draw on liquidity like this. I would just rather take the 1-to-1, get my piece of the pie, and get out of the trade. So that's how I use 15-minute CISDs. That's how I enter off of them right there, which I just described. Right, this is the external low. We have 10 a.m. opening price right here. 15-minute change in the state right here. 10 a.m. opens high, and we end up taking out this first external low right here after, I believe, 15 minutes. So extremely simple. This was a great day to be able to trade. This is very understandable, at least in my eyes, right? We create this 15-minute bearish CISD, 10 a.m. opens, we manipulate into it, and then we end up getting a entry function lower targeting this external low. So that's 2 points of interest covered right there. We're going to go and try to find the third one right now. If you guys don't know these concepts just yet, there's plenty of YouTube videos all over the internet basically going over all 4 of these concepts. If you guys want, the rejection block can be hard to find, but the person that I learned the rejection blocks from was Powell Trades on YouTube. He has very good content going over rejection blocks and how to use those. And then the other 3 concepts, fair value gaps, CISDs, order blocks, those are just basic ICT concepts you can look up on the internet. And there's really good information going over how to mark them and use them. Okay, so going into this day, I had a bearish bias because we take out 2 a.m. candle high, leaving 2 a.m. candle low, and we close back within this range. Here again, we ended up having this is going over CISD example right here. So 10 a.m. opens higher, right? We can go on here, and we create a stop hunt within here. This day did end up losing. I remember I took this trade. I went short right here and targeting a 1-to-1 risk reward. And this day it did end up losing, which is all good. Having a 70% win rate, you are going to lose 30% of the time, but in the long run, you're going to be winning. So, but just for proof of concept, this was going over a change in the state and delivery, which was right here. Bearish. Right here, we end up manipulating into it and then going lower a little bit, but we did end up coming back higher. So we'll go to the next day here. All right, this was a bullish example. 6 a.m. candle ends up closing above 2 a.m. candle high. All right. Here's a really good example. This is going to be going over the third point of interest, which is going to be a fair value gap, probably the easiest concept for you guys to learn. First of all, you want to mark out your 10 a.m. opening price, which we have right here. 10 a.m. opening price is right here. Below 10 a.m., we create a fair value gap on the 15-minute time frame. Keep in mind we have a bullish bias, so we're looking for bullish PD arrays below 10 a.m. opening price. So we end up tapping into this 15-minute gap right here. All right. And we can fast forward price. we end up getting super choppy. And right here, we ended up putting in an SMT right here. And then we got our bullish change in the state and delivery right here. So this is where I ended up going long, targeting a 1-to-1 risk reward. Keep in mind we're delivering from this 15-minute gap as well as a 30-minute gap below 10 a.m. opening price. We have a bullish bias. And then right here, we create a bullish CISD on the 1-minute time frame. We can fast forward price and we end up hitting take profit right here. Super easy to understand. We're delivering from a fair value gap. This is considered 15-minute FVG. Okay. Basically, fair value gap in simple terms is when we have a massive amount of displacement that we end up leaving a gap between this candle's wick and the third candle's wick. And that's how you mark that out right there, just like how I just did. And then keep in mind we're also below 10 a.m. opening price. So this would be considered open low, high close. And then for your external draw on liquidity would be right here. That's your external high. All right. So that's the third concept that I used for the points of interest. Now we can go, hopefully, I remember there was a order block. I'm not sure if we got an entry, but I know that we did see one possibly this next day where I was looking to take a short from here. Okay. Yep, it was this day. This is also a super easy concept to understand and learn. So first thing I do every single morning, go onto the 4-hour time frame, mark out the 2 a.m. candle low, which is right here. What do we see? 6 a.m. candle closes far below this 2 a.m. candle low right here. So I automatically have a bearish bias going into 10 a.m. That makes me want to see a open high, low close. I also want to see a manipulation into a 15-minute PD array above 10 a.m. opening price. So what do we create here? This is considered a 15-minute order block. 15-minute OB. 10 a.m. This is 9:45, so 10 a.m. opens right here. Okay. Mark out our 10 a.m. opening price. Right there. We scale down to the lower time frame. On this day, we ended up, okay. This would have also been a winning trade right here. So our 10 a.m. open is right here. We manipulate up into the order block. And then from there, I want to see a stop hunt, which we end up getting right here. And I take a short as soon as we get this bearish CISD right here. Okay. And I target a 1-to-1 risk to reward, just like this. Very choppy trade, and we do eventually deliver right here. But yeah, this is going over, this is the fourth concept. This is considered an order block. Whenever we're moving down after the change of the state and delivery, and we have an up candle like this, then we have a bearish candle, and we close below this opening price, that creates a order block. And this timing right here was perfect because we have 10 a.m. here. So this creates a 15-minute PD array that I would want to see 10 a.m. open high right here. and have a low close just like that. And within this PD array, obviously we ended up getting our stop hunt, which I'll create in a video going over stop hunts tomorrow. So we can mark this out just so that way you guys have a little bit of interest going into tomorrow. This is what it is right here, this stop hunt. Basically taking out a swing high within this PD array that we're trying to go short from. And yeah, that was the fourth concept. I know these drawings can be a little bit confusing, so I'm going to remove them and just purely mark out the 15-minute order block on the 15-minute time frame. So yeah, as long as you understand your bias, the four concepts, and then also another thing is the open, high, low, close. I described the opens and the closes and then the highs and the lows of each candlestick in last video yesterday. Those are super simple candlestick like structure to understand. And then once you get that down, you can look into the open, high, low, close right after 10 a.m. This is considered a 10 a.m. PO3, basically accumulation, manipulation, distribution, but this basically involves 10 a.m. manipulating into a PD array and then distributing down to the external target, which would be considered, I guess this low right here would be considered your external low. But yeah, that's how I use all four concepts every single morning after determining my bias, which is super easy. I would say, rewatch this video over and over until you understand all four concepts. I briefly went over each one, just drawing them out in front of you guys. But once you do this on your own on your own chart, you'll start to see how 10 a.m. opens and manipulates in one direction, and then we have a closure in the other direction. So yeah, that's how I use all four of these concepts. Thank you guys for watching. I hope you guys have a great rest of your day. Thank you.